All right, everyone, welcome back for the episode of This Week in Charts via Carnivore Trades and Wall Street for Main Street. If you're not done so already, please give the video a thumbs up, like, comment, subscribe to the channel. Come find Jason on Patreon. Come find me on carnivoretrades.com for swing trading alerts, analysis, and live day trading. Anyways, let's get into it this week here. So doing the video a little late. It is Monday here. I did take some time off last week and now kind of getting back into it here, but overall today it is Monday and the market's kind of on the quieter side. Essentially market is flat to positive here, and that's kind of typical for a the day after a holiday week. I talked to you guys about the market last week and actually a few weeks before that, and I said we probably would bottom before the 4th of July holiday, and you can see we bottomed last Monday, little dip, and then a pretty good holiday rally. So again, that's kind of going along with the theme here, light volume going into a holiday week. It's just going to be hard for the market to really go down in that type of environment. And we did do some consolidation here for about 9 or 10 days here on the SPX. And we did break through that previous all-time high and closed at a new weekly all-time high. So markets here continuing up. And, some other players starting to take over a little bit. We saw Tesla take a pretty good step last week. A lot of short interest in that stock. And a lot of the things that I think will kind of continue up here are things like this, such as a Tesla, or perhaps even certain small caps. I know I've talked about that a lot lately. But you can see Tesla here with a monster rally. Actually I know there's a lot of lines on here, but you have an inverse head and shoulders right here. And that measure move played out to target here, actually on Friday. So pretty good move for Tesla. But even, if we look at the small caps, IWM, actually I'm going to use the RTY. Nice tightening wedge here. And, a lot of things getting ready, I think, for, another push here. But is that going to be coming from the NASDAQ 100? Is it going to come from the semiconductors, or is it going to, are we going to see that rotation? I think that's the big question. Take a look at a laggard semiconductor. This is one that we own with Carnivore Trades. Intel up almost 6% here on the day. And big outside move here over the last couple of days. AMD is another laggard too. So I think a lot of these laggards and, kind of hated sectors, hated stocks are starting to rally. I think we talked about Rivian last week in this video, and that's had a nice recovery off the lows. So again, just hated stocks, hated sectors are doing a lot better. Take a look at ARC, continuing to kind of rally up, still has some resistance up here. But again, is this kind of getting into a dash for trash? Are we getting close to a blow-off move? That's certainly something that could be happening. I don't think we're quite there yet. We'll know sooner rather than later. But again, market's holding up, and I've been telling you guys not to bet against it just because the breadth is not good. Does not mean the market cannot go higher. So just be aware of that. We do have some data coming out. We're going to have Powell and Yellen tomorrow testifying before Congress. And then on Wednesday, we've got some mortgage data, wholesale inventories. And Friday, actually, we have a 10-year note as well on Wednesday. And then Thursday, CPI, jobless claims as usual. And then on Friday, we've got PPI. So inflation data coming out this week. Obviously, that will move the market. I'm kind of in the camp here that the market's going to continue to ignore macro unless a big bomb goes off. So I think at this point here, anything above 5,500 SPX, I think the market's fine and can continue higher. I told you guys 5,600 was my likely target. I said that way back in late May, early June, and we're getting up there. We're very close at this point. We had 5,583 today. I think we might even overshoot a little bit. That tends to happen. But again, market's holding up well, and as long as we continue to see certain hated sectors kind of rotate here. I mean, we can talk about, breadth till we're blue in the face here. But, the heat map's not terrible today. This is actually the Russell 2000, pretty mixed to positive. And again, today, S&P, it's really big tech that's on the weaker side. The other 493 seem to be okay. So as long as that continues, market can go higher. If you see a high, what would change my mind here? A high volume sell. So on the spiders, 100 million or more with a 1% or more down day. We are nowhere near that. Volume is extremely light, and that's why I continue to say keep giving the bulls the upside bias. We're at not even 17 million shares here on the SPY at 3 o'clock. So summer doldrums in effect, and they can continue to float this thing up. until we get a macro event that unpins the market, but I don't think we're anywhere near that just yet. So anyways, triple Qs here continuing up. We talked about that. Russell 2000, again, kind of inside of this wedge here. Do they push higher? If we can break above this, your next level is 210, and then it's on breakout, up to 220 and 225. But that still has yet to happen. But those are levels that I'm watching here. The diamond flat to lower today, although it did get a little pop earlier, and it's still back above this 393 handle. Semiconductors here up 1.4. Again, still in an uptrend, and again, laggards are helping out. Intel, AMD, we talked about that. Yeah, Nvidia is green today, but it's not really having a huge outside move by any stretch. So again, laggards are the story here today, although TSM was up nicely before coming back in off of the highs. IGV, this has been my favorite sector. I've been telling you guys about this for a while. It is pulling back today finally, but look at the run it's had. A month ago, or I should say, yeah, really just a little over a month ago, we were at 76, and we closed Friday at 89. So this has been one of my favorite sectors, cloud software, to take over for chips, and that has happened. It is pausing here today, essentially into double top. I think this gets up into the 92 handle. Dow Transports here down about 1%. They are coming off the lows a little bit here, but a pretty good slice. Lower again, rejecting at the 100 moving average last week, and it is pulling back. But if this puts in a higher low, it can push higher. Still got a big level here around 15.7, 15.8 to get through if it does, in fact, make that higher high. So let's talk about yields here. So the 2-year yield ripping lower, breaking down essentially on Friday, and kind of a pause here today. So the yield curve starting to unwind just a little bit. Today it's actually backing off a little bit. There you can see the 3-month 10-year backing off too. We've gotten a lot of teases, right? So it's been, we had one big pop here, we had a big pop there, and then no follow through on any of these. But if it starts to push above, negative, minus 20, which is essentially right there, that's probably going to start to uninvert. That's on the 210s. Now the 3-month 10-year is still inverted by 110 basis points. So that is still way out of whack. The yield curve has been inverted for over a year now on the 210s, and we're coming up on a year on the 3-month 10. 2 years, not 1 year. 2 years on the 210, and coming up on 2 years on 310. So at some point they will uninvert. I think perhaps the market is sniffing that out. That's probably why small caps are perking up. Will eventually that be bad? Probably. Yeah, I think it will. But in the short term, the market will probably like it. And then it will not like it once it kind of overcorrects. But we can talk about that another time. Any case, XHB, I do not like this. It's up 1% today, but down move last week. And this was when the market was rallying. So this was Monday's candle last week. So home builders took a slice while the stock market was breaking out. So a laggard sector, to say the least, or in fact, it was a leader, and now it's a laggard. I talked about these lower highs, and it is breaking lower. I think this is probably going to want the mid to low 90s here. And I think they could get a pretty good bounce at that area. But right now, starting to set up a bear flag here. So home builders are weak. On the other hand, the VNQ, commercial real estate, still pretty strong. If we look at an IYR, it's holding up okay. XLRE, got a nice wedge here. So home builders specifically are not strong, but other sectors of housing are holding up for now. Fins here had a good week last week with a good bid on Tuesday, and then just kind of pulling back here into the weekend and on today. KRE is up 11 cents today, and KBE up as well. So those are still holding up okay. Broker dealers is down today, but again, they close at essentially a new all-time high on Wednesday. Oil continues to back off. So this hit major resistance here with the 786 last week. We might have a little bit of a top here in oil for the foreseeable future. So I'm going to get rid of these lines so it's not so confusing. But you hit that 786. The reason I say that is if you look at, pretty much seasonally every year, oil tends to top out in the first or second week of July. We're also in a general election year. I promise you that the Biden administration does not want oil higher, right? Take that however you want, but it is kind of topping out on schedule. That doesn't mean it's going to crash, but it just means that I think it's more likely that we're going to see kind of backing and filling towards the end of the year. In oil specifically. We can look at UGA, gasoline, probably about the same thing. Again, summer driving season hitting a peak right around now, and again, you're going into a general election. I don't need to tell you, you know, what the administration's thoughts are. So, but that doesn't mean the XLE can't hold up. I still think XLE is hanging in there, and I do think this will be a very good buy. If this can get back down to that 86, 87 area, I like it. It is pulling back. It's starting to lose that green bar there, which I don't like. But I am watching these for dip buys. XOP on the weaker side here today as well. And then same thing with OIH, although OIH actually holding up okay. It's in the short term, it's the strongest of the three. So I think energy is going to be a good play here at some point in the near future. I'm just not sure if they're going to firm up now or if they want to come back down one more time. But they are hanging in there for now. But I'm not in love with oil at the moment. CCJ down a little bit as well. So for the first time, well, not the first time, the second time in the last couple of weeks or months, we're testing that weekly 20 MA. I think if we break below this, we're probably headed back down into this kind of lower area, 42.50, 44, which could indicate a little bit more of a bigger correction in uranium. You see the URNM there. The big level to hold here is 47.14 on a weekly close, and then the same thing with the NJ. You got to hold that breakup bar from January. So uranium doing some backing off here, and a little bit of a corrective move. Nat gas got destroyed last week, although it did. I think this is a local bottom here. It's funny, you know, we have a hurricane and the nat gas market just doesn't care. But, you know, we have them every year, but just, you know, you think there'd be a little bit of tail risk at least. But either way, take a look at the hourly here, just since we're doing this right now. Pretty good gap down on the COMEX, or the futures open last night, and then a pretty good V shape, and it is holding up now. So I think that with that gap down, this probably can go back up and test, you know, 250, 255 in the short term. I told you guys to be careful about being long nat gas in early June, and that's been the right call. I do think it is wickedly overdone to the downside, though, at least in the short term. Probably looking for a local bottom up to about 250, maybe 260 if it really wants to bid up. Again, this seasonally, it also, you know, tops out around that June time frame, but it also kind of bottoms around mid-July, which we may be kind of getting into right now, and then it kind of inches up into the fall, and then you get a bigger rally into the fall, at least seasonally. So again, it doesn't mean it's perfect, doesn't have to do it that way, but we're kind of on time with a lot of these moves here in the energy market. So, but nat gas, I think we got a local low in play. Dollar index here, kind of flirting with this little wedge trend line. It is starting to slip below that. Again, it's not perfect. We could, you know, we could cheat and we could say it's going there or there, but it's just to give you an idea. But dollar index did back off pretty good last week with the yield curves unwinding. I told you guys there was a lot of resistance right here, and I wasn't kidding. So it did back off of that. But it still has room for a higher low, and if it does that, it can push up. So again, seeing the dollar here, as long as it's inside of that green, I'm going to take that as bullish on the weekly. But it did back off a little bit last week. Gold had a really good rally, very good rally last week, and it is backing off today. So 24 is still pretty good resistance there. But again, on the weekly, this is holding up well. I think this is setting up for a move higher towards, you know, into the end of the year, but I think it's got a little bit more consolidation to do. Silver, same thing, nice outside move. Wasn't sure if it wanted to go down a little bit further, but good outside move last week. And again, backing off today, this is also setting up as well. That weekly 20 MA is catching up to price. I told you guys that's what I wanted to see, and it's starting to do that. So metals holding up nicely. Platinum backing off, though, today, down 3%. Still a lot of chop, though, and again, it's making those higher lows, though. So it's been slowly grinding here, but backing off a little bit today. Palladium backing off today too, but it did got kind of the double bottom. I was looking for a pierce here. It didn't quite get there, but guess what? We got to close above the 200 moving average for the first time since, you got to go back to October 2022. So trend is starting to slowly kind of, you know, turn around. Look at the weekly, kind of a double bottom W pattern. I think it's cheap. So again, if you want something to tuck away for a while, I like it here, and you guys know that. So I'm not saying it's going to go right away, but I think, you know, at these prices, it's not bad to tuck some away. Anyway, Bitcoin backed off pretty sharply last week. I'm watching this kind of channel here. A lot of hysteria last week. I did inch into this again. I told you guys last week or the week before, I did buy that. We got a little quick profit out of it. I do like it here again. So it's into a pretty good level. I think at worst here over the next week, it's going to consolidate and then it could potentially drop again. But I think there's a fairly decent chance this could push back towards 60 to 63. So I'll be watching that in the near term. I think at least for this week, that worst case scenario, you're going to go sideways. If it does that, then I think it can go lower, and that would get me bearish. And I would probably just, cut for a break even or something like that. But I do think there's a good chance of a continued bounce here in Bitcoin. But a lot of noise, a lot of hysteria in Bitcoin right now. If it does break down, the number I keep hearing is 45,000. So maybe it doesn't get there because a lot of the time these levels get front ran. But we'll see. Bitcoin backing off last week. And again, don't get too bearish on it. Because if you look at the monthly, and I know I say this all the time, it's just a pullback pattern, right? Here's your monthly 20 MA. It's extended. If this just catches up to price and you're just still doing this, then you can go higher. Okay, so just keep that in mind. Outside of that, market's holding up right now. Market's basically flat here. A little bit of a hangover day. Again, we got inflation data this week. We've got Powell and Yellen tomorrow, and we'll see what we get with that. But I think the market holds up, and we should see 5,600 and possibly a little bit higher before this rally is concluded here. But we'll talk about that more as we get closer to the end of summer. So anyways, guys, going to wrap it up here. Don't forget to come find Jason on Patreon. Come find me on carnivoretrades.com, and I'll see you guys all next week.